Hello everyone, welcome to Smart Investing. Philip here. Yesterday we had a very good market, I would say. Quite interesting because we can see that the the bearish momentum is starting to continue. Sorry. Hello everyone. This is Philip here with Smart Investing. Welcome to this video. No. Kupsa. Good morning everyone. Sorry. Good morning everyone. Welcome to Smart Investing. Let's do a quick recap of yesterday market closure and what we can expect today. So let's look at the trading view and then we're going to move from there. So let's start. Okay, let's get started with first of all the SPY index. You can see that yesterday the market pulled back again with minus 0.46%. And you can see now that we are just below the 55 moving average and we are at the lowest level of the Bollinger Band. So definitely this is what we expected. This was rejected at the 613 all-time high, and now we are pulling back to the previous 55 moving average. So we've lost it yesterday. We are at the lowest level of the Bollinger Band, so if we don't rebound today, we just break this level again, then the next level is definitely on the 575 level that we discussed on the SPY video of where we are sitting on the SPY for 2025. So definitely you need to watch if the market is going to continue this bearish movement and go down to this level of 575. We can see also that the RSI is continue to move lower than the 50 level, and that's as also indicate bearish momentum, and we are going to really flirt with the oversold territory. So again, SPY not so great. If we move on the 5-minute chart, you can see that the movement on the last 5 days, on the last few days, we are flirting with the all-time high. We have been rejected, and again we are stabilizing on the 595 600 level, what actually we have forecasted on the SPY full analysis in the previous video. Now if we move down to the QQQ, we go to the daily chart. So we go to the daily chart, QQQ, sorry about that. QQQ, we go on the daily chart. Yes, okay, that's it. Same story, we are actually breaking down the 55 moving average. which is never a good sign because we are losing institutional support from that level, and we are approaching the lower band of the Bollinger Band. So same story as the SPY. We have been rejected from the all-time high of 542, where we reach actually the higher band of the Bollinger Bands. And as expected, when we reach the highest level of the Bollinger Band, usually we are just pulled back to the middle of the Bollinger Bands, and then if the bearish momentum continue, then we have to hit the lower band of the Bollinger Bands. So if we break that level of the lower band of the Bollinger Band, then the next level is the 200 moving average at the level of 490. We can see also that the RSI is pretty going lower as well of the 50, and it's approaching the oversold territory of 30. So we need to keep watching. The market definitely is not bullish, and the bullish sentiment of the last year or the beginning of the year is actually vanishing, and we need to watch out from now if the market is going to be starting to recover from this bearishness. And I would say that the bullishness and the excessive bullishness is a bad sign, because usually the market crash when investor has a very bullish sentiment and almost like a forex sentiment, but not that there is a lot of fear on the market, there is a lot of bearishness. So this is a good sign that we are just slightly retracing, and then the market will pull back again after the NVDA earnings, and some of the other earnings are going to be released this week. So let's see, and this is something we need to watch. Let's look at the IWM. IWM, this is the story I really don't like, because you see we have a long-term we have a long-term upward channel, which you can see in yellow, and we actually had a fake breakout from this channel, and then we quite dramatically pull back to the inside of this channel. So far we have continued to be within this upside channel, and now we are reaching the lowest band of this upside channel. So definitely 216, 215. If we go below that, then this is a very bad sign for IWM again, and we're going to retrace, I believe, at the level of 207, because this is where we have the strong support here from the volume that you can see here. And you can see that this is the natural positioning of the next support level. You see? So 210 definitely is the next level to watch if we break below the 215 on the IWM. You can see as well that the RSI has been really weak, and we are approaching the 30 level, which is oversold territory for the IWM. What can we say also that is quite important today? We are going to watch SMCI. SMCI, you know that need to release the financial statements today, needs to file all the 10K filing, and they haven't done yet. Today we're going to watch if they're going to do it, and if they don't do it, then I can tell you that the market will punish this company, and probably we're going to go back to the 30 level. So I have traded this upside, just to let you know. I took some profit when it reached the 65, which is about 50% of the position I had. And then when it actually started to pull back to 50 yesterday, outside the regular time of trading, I sold again the 50% of the remaining position I had on SMCI, because I find it very strange that they are waiting the very, very last minute to find what they're supposed to find, and knowing that they have not been very reliable in the past with these type of things, then I think I wanted to reduce my risk exposure and playing with the house money. Actually, the overall trade has been very profitable. So what is left in the trade is the house money. So I'm not losing my initial investment. I already recovered my initial investment, and now it's play money. So if the market collapse back to 30 or 40 or to the 200 moving average of 40, then I will just write it up and write it down. I just leave it there because I think long term SMCI is undervalued. I mean, it's trading about one time its sales, and half time its 2006 projected sales. So I think this is a very very cheap company. But again, I'm very disappointed that they haven't really make an effort to file the 10K filing before the very last minute of the deadline. So watch out today for this SMCI company, and let's see if they do what they're supposed to do. Palantir is quite a very famous stock for the retail investor. I mean, this company, this is a typical pump and dump, because you can see from the all-time high, now we are more or less 30% down from the all-time high, the one that actually took the investment when the bullishness was really really high at under 25. Then they have take a 30% hit already. So unless you are a very long-term investor, I don't think you're going to recover that type of money in the short term. I think the next level for Palantir is we're going to close the full gap here, because we have a huge gap between 84 and 100. So I think that they're going to close the gap to this level. Let me draw the line for you. Yes. And you can see that closing the gap is at the same time at the strong support level when we have more volume. And you can see also that this is the level of the 55 moving average. The 55 moving average is very important again, because you have the institutional support above that level. If you break the 55, then institutional investors stop actually investing in the stock for the time being. So I would say if we break that level of 84, then we're gonna go to the lowest level of the Bollinger Band, and we are going to reach the level of 70. So watch for Palantir. I would wait. If I was you, I would wait before heading to existing position or before entering a new position. I would wait at least that the stock fully continue to fill the gap, and then wait a bit. If it rebound from the 84, then maybe it's a good swing trade to take, and if not, then it's better to leave it there and just wait that it fully pull back to the 69.70 level. What is also interesting to watch is the level of QQQ that we have seen already, SPY we've seen already, and what is quite interesting to watch is the MAX 7. I use this funds that is called Ron Hill Magnificent 7 ETF, because it includes basically all the Magnificent 7, so you don't need to create a tailor-made index to track what is the MAX 7 doing compared to the overall QQQ. You can see that we are following a downtrend channel, which is limited by this yellow line, and you can see that we've tried many times to break this level, and we actually hit that level and always pull back, hit that level, pull back, and again we hit again that level that is coinciding with the 55 moving average, and we break below the 55 moving average. So naturally the next support is 52, and I believe that considering that the control point is much higher at 55, and you can see that the volume is huge at this level. So I think a lot of institutional investor are still very bullish overall on the MAX 7, but for the short term, that this bearishness is pushing back the MAX 7 to test the 52 level. From the 52 level, I expect the MAX 7 to start to bounce back, and if you play this quite well, then you can probably make 13% investment increase to the whole time high again. So again, at the 52 level, for me, I'm going to add to my existing position. I have already a position into the MAX 7, quite a substantial position. What I've done to protect my downside is I've sold a lot of calls against that position when we reach the all-time high of 58. So basically, the loss that I have from my current position from 58 to 52, almost 3/4 of that loss has been absorbed by the selling call. So what I will do is I will wait the market rebound and close my call position to let it ride again, and then sell another call position when I see that the market is bearish again. So this is a quite technique that you can do to hedge your position, not to buy put options, but to sell call options against your existing investment. So you make some income, and then you make some downside protection if the market go down quite significantly. So far, the MAC 7 from the highest, from the all-time high, has decreased by 10%, which is a meaningful pullback. We can say is a correction, and then let's see now if it's going to hold the 52 level, and if it doesn't hold the 52 level, we are going to reach the 50 support level. From the 50 support level, I believe that we are going to bounce back unless there is something major and significant in the market that will derail the overall bull market. And if that happens, we're going to be at 15% correction. 15% correction is nothing really to be worried about, because you can see that in August last year, we had a huge correction of about 20%. So having a 15% correction or 15-20% correction for big tech company like the MAC 7 is pretty normal. 10% is pretty normal also, so I wouldn't really panic. I would just head to my existing position. I mean, these are the strongest company in the world, so you shouldn't be too much worry from a correction or pullback from these magnificent 7. Over the long term, the earning growths and the cash position, the balance sheet are so strong that I believe that they will rebound, and you're gonna still make money on these. But maybe the best way to hedge the position is to sell calls if you are buying position today. So you can buy position today and sell calls against it. And if the market reverses, then you just close the call and you let it ride to the next level. Where if this is bullish again, then you sell call. Then this is what I do. Otherwise, you can see what is interesting is MicroStrategy. MicroStrategy is a Bitcoin play. I would say is a leveraged Bitcoin play. Hold on, MicroStrategy. Hold on. MicroStrategy. It's a Bitcoin play. Yes. Hold on. Okay. MicroStrategy is a Bitcoin play, but you can see that it break below the Bollinger Bands, the lower band of the Bollinger Bands, and it tried to catch some support, but so the Bitcoin has actually decreased a lot. So of course, MicroStrategy is a leveraged position on the Bitcoin, so it's normal that it's actually put back a lot. What is quite interesting is when the market reached 440, I wanted to short MicroStrategy, but the momentum was so bullish that it was very scary to short this type of company. Although that from all the fundamental analysis of MicroStrategy that this is very, 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 very much overvalued, and then it will collapse eventually. I mean, definitely, if you see that type of parabolic move, don't chase the stock, let it run. Never mind if a lot of people are making a lot of money, because now you can see from all-time high they've lost already 50% of the investment if they invested at the all-time high. So don't be the bag holder, let people chase the momentum, and if you are late in the momentum, don't go into it. If you are early in the momentum, of course, just let it ride. I mean, just put some investment, let it ride, then pull back your initial investment, and you play with the house money for the highest upside you can get. If it pull back anyway, you still make money, so what do you care? I mean, this is the most intelligent way to play this type of momentum play. Otherwise, what else can we see? nothing really out of the ordinary. Let's see now if we have some hold on. Let's see if we have some economic data today. Wait. Okay, we got some economic data. Not so much. Consumer confidence is coming. Red Book House Index price, S&P share price, not so important. Nothing really significant on the economic data release. So I would say that the market just opened. Let's see what is the mood. The mood is still on the downside. So let's let it run its course, you know. It's on the downside. The QQQ is minus 0.5, SPY minus 20. TLT is moving up. Of course, it's a defensive play, so it's normal, it's going up. And what else we can see? The 20 years is decreasing, the 30 years decreasing. The short-term rate is actually decreasing on the 2 years, on the 3 months, not so much. On the sector, everything is flat or going down, except financials, industrials, consumer staples, real estate. So all the defensive, and healthcare. So basically all the defensive is going up, and all the more cyclical and more aggressive growth oriented are going down. That's pretty it. If you look at NVDA, it's 127. So NVDA is going to release its earning tomorrow. So that's going to be a big day, and especially for the mood of the market. So if the earnings are quite good on NVDA, expect the market to rebound sharply and to get the animal spirit back into the market. But if not, I can tell you that the market is not going to go back to the all-time high after some time, you know, because the market has no big drivers to go up. It has more drivers to correct and to pull back than drivers to go up. There is no leaders. It's the Max 7 are not leading anymore the market. If you check the QQQ against the Max 7, you can see QQ is outperforming Max 7s on the year to date. Actually, let's try to put this chart. Max 7 against the QQQ. Hold on. Huh? Max 7. Then you're gonna do against QQQ. Yes, same scale. Then you can see on the year to date. Voilà. Year to date. Alright, you can see QQQ is plus 1% and Max 7 minus 5%. Definitely QQQ outperform Max 7 by more or less 6-7%. Definitely we have lost the leadership of the Max 7, and it's very difficult for the QQQ to reach a new all-time high, because Max 7 obviously is making almost 40% of the QQQ. This is quite challenging, you know, to go much higher. Having said that, I wish you all a very good day for trading and for investing. And again, don't panic. There's nothing really substantially wrong in the market. Just be careful. Don't invest a lot of money in one go. Let the market pull back. Let the market do its course. And then after that, when you see a clear reversal, then you can start to invest. If you are scared, you can always buy put. And if you have existing investment, you don't want to buy put, you can sell calls for some income. By the time the market recover, you make a bit of money. And then if the market rebound, you can always close the call, you know. That's the flexibility you can get. Let's look at the VIX to see before we before we leave it for today pre-market overview. The VIX, where is the VIX index here? Yes. So the VIX is still very high. You see, still very high, you know, it increased from 15 to, hold on. Okay, it increased from 16 to 19. So the VIX definitely on the high, but we've been there before. We've been there in February, beginning of the month. So again, you see VIX pull up, then is more a buy opportunity than pull back, stop buying, pull up, then maybe another buy opportunity, then it will go down again to the level of 15, 16. So if it goes much higher to 23, then again let it do its stuff. And then usually when the VIX is going really much higher, then this is a buy opportunity. This is a strong signal you can start to buy in the market. So it's counterintuitive, but it's the way usually it works. So again, I wish you a very good day and thank you very much, and see you after the market close. Bye. Don't know. Yes, sorry. Please, if you like this video, you want to have this type of daily review before of the market, after the market, so let me know. Leave your comment, hit the subscribe button, hit the like button. This is for free, and this will help this channel improve and grow. And you can always leave me some feedback if you think there is a lot of things that I need to improve. I'm very open to feedback. This is for you, this channel is for you, and we want to make it better along the way. Thank you and have a good day. Bye.